Hi everyone, Simon Barwick here from Bentleys Wealth Victoria. Hope you're well. Presenting our first portfolio and market update for 2026. We hope you had a great holiday period and are energised for the year ahead. Firstly, this is general advice, so if you do have a specific question, please speak to your advisor. If we look at 2025, it was a volatile but strong year. There were solid equity returns despite significant uncertainty at times. AI and tech infrastructure supported earnings, even though there were multiple geopolitical flashpoints. If we look at the key global themes in 2025, there was much in US, Europe, and Chinese returns. Bond yields were elevated in the year, and there was a rotation into cheaper markets and strong thematics across defence, EVs, and Chinese tech. If we look at breaking down 2025 into 4 quarters, if we look at the first Q1, this was really characterised by tariffs, volatility, and safe havens. So there was early US policy turbulence, escalating trade tensions, gold surpassed $3,000 US, which seems cheap at the moment, and the RBA delivered its first interest rate cut since 2020. If we then transition into Q2, this was really a quarter where there was a large sell-off, then stabilisation and a tech rebound. Sweeping US tariffs were implemented and there was a global sell-off. However, there was a strong recovery after there was some policy pushback, and this was driven by AI, semiconductors, data centers, and which really contributed for a global tech surge. Heading into Q3, this is where the markets hit new high and there was massive AI investment. This was characterized by deals of $100 billion between OpenAI and NVIDIA and the $500 billion Oracle Stargate project. During this time also, East Asian markets outperformed, specifically in Korea and Taiwan. Heading into the final quarter of the year, this is really where it was characterized by shutdown, gold surging again, and markets cooling. What we mean by the shutdown is a US government shutdown, which delayed a lot of economic data coming out. Gold broke $4,000 US during this time. And there was then a November slowdown where speculative assets fell, but the S&P 500 still hit 16.4% for the year. If we look at 2025 breaking quickly down into some asset classes, Australian equities, global equities, commodities, and then bonds and credit markets, Australian equities, actually the ordinaries increased by 10.56 for the year. Resources finished strong. However, healthcare was weak and the small ordinaries were supported by gold, lithium, and copper. If we head to global markets, we had a couple of standout performers with Korea and Taiwan. US tech remained dominant. Europe was stable. China was mixed. And there were memory and chip shortages, which really benefited Asian markets. From a commodity perspective, as we've touched on already, gold surged and there was a strong upward trend across the year. Copper also reached all-time highs, but oil was weak. Even though there was geopolitical risk, there was much oversupply in the market. From a fixed interest and credit overview, bond and credit markets, long-dated and Australian yields rose. Australian 20 to 30% yields hit between 5.2 and 5.3%. But credit was stable and characterised by low default rates. Key economic themes during the year, the US Fed cut rates 3 times ended in 3.5 to 3.75%. There was slowing job growth, but both US and Australia were characterised by higher than expected or persistent inflation. If we head into 2026, really what do we expect to see ahead? We believe we'll see moderate equity returns, but solid fundamentals. We believe there'll be broader opportunities set across fixed interest, property, and alternative assets. We believe diversified portfolios will remain well positioned, and the global economy we believe, will show resilience despite the risks that we believe are still in the market. So key takeaways from 2025, it was really characterised by strong returns despite uncertainty. And in 2026, we believe that opportunities remain broad. Finally, I just wanted to touch on a quick practice update. We do have some exciting developments in 2026, and we'll share those in due course. We've added some key staff in key areas, which we're really excited about. We've hit some key milestones with our BWV portfolios, and we're able to deliver those a little bit cheaper now to clients. We're always looking to improve our service to clients. So if you do have any feedback, please contact your advisor. We are looking to continually improve. And finally, we are looking towards a successful 2026 with you all. If you have any questions, please speak to your advisor, and we look forward to catching up with you next month. Thank you.